Hey, what's up, guys? Leo. Welcome back to the channel. So, I want to talk about Bitcoin. I think the market is changing, and because okay, so you hear all these people they're talking about I think a couple people are talking about really crazy prices, like a million within a year. I believe it's Plan B talking about that, and it could very well happen. I mean, we're talking about governments buying, but we also have a lot of people that are saying, oh, I only think it's going to go to 150,000. And I'm like, really? Only 150? I mean, talking about world governments buying and you only think it's going to go up like 50%? I don't know about that. But I do think the market has changed. I think that we're at a point where we aren't going to see the 80% drops and 90% drops that we've seen before, because typically you see those with an asset that is very immature, meaning it doesn't have a lot of liquidity, meaning like trading volume and people putting buy and sell orders on the books, because it doesn't take a lot of. The way an order book works is basically you have a certain amount of orders at, say, $10, and if a buyer comes in and they eat up all those orders, well, now the price moves on. It moves to a higher level until you get to a point where you have more sellers, more people that are willing to sell at a given price. And so now that we're seeing, and that's exactly what would happen in the past. So, there's the 4-year cycle theory where people say that, every year or every 4 years you have the halving, which means that the block reward gets cut in half and now it becomes more scarce. Okay, well, what does that mean, right? Because more scarce, we're getting to a point where, I think there's something like 19 million Bitcoin circulating. So it's not a scarcity thing, in my opinion. I think that the more direct mechanism that is actually causing the 4-year pump that we've always seen is that the miners don't have as much Bitcoin that they can sell on the market, because the miners have a fixed cost. They've got rent, they've got supply costs, they've got their electricity bills they've got to pay. And so every 4 years that gets cut in half, meaning the sell pressure on the asset gets cut in half. So what we end up seeing is, that the sell pressure gets cut in half, and it's like a compressed spring, right? So we have a lot of buy pressure coming in, and then suddenly the sell pressure gets cut in half, and so then the price just springs up, and we see these crazy runs. And the same thing happens again, just this previous cycle, but not as much. And you see this big spike up, and then it comes back down. And we're getting to a point where that I don't think that's going to happen as much, because like the block reward is getting to be so small every 4 years. And so I think that what we're going to start seeing more so, especially because we have so many institutional buyers, like we have the ETFs coming in, we have governments coming in to buy. I think that what we're going to see is more of a slow grind. I think it's just going to, gradually be grinding up, seeing these 30, 40% pullbacks over time. And then, around 2030 gets up there into the millions and whatnot, and just slowly grind higher. And I think that makes a lot of sense from an Elliot wave perspective as well, because, I think that what we have here is a series of 1-2s. So like this is a 1-2, and then in Elliott wave theory, you have 5 waves. So effectively what we're going on to is like a third wave of a third wave of a third wave, which a third wave in Elliott wave theory is basically a really long, extended, powerful wave. And if with governments and institutions coming in to buy, I think it makes a lot of sense for us to be on a third wave. And I don't know, I'm really hesitant to sell because like okay, let's say that it goes through the typical 4-year cycle, right? That means that we should be topping out around, it would be October, September-ish of this year. That would be the top of the market. But I'm so hesitant to actually just take profit, because like what I did here, the previous bull run, is I sold and then I bought back. I think I bought back 1,500 or 1,600 on Ethereum. And I think I sold out a large portion around, let's say it was 3,800, I think. I have to go back and look at the exact trade, but it's just, I'm so hesitant to do that this time, because it feels like it's just going to keep going higher. and just not crazy high, because if we do get, and this will be the tell, if we see a crazy run where it like runs up to 1 million within a year, okay, yeah, we're probably going to pull back pretty hard. But you get to a point where an asset is so mature and it has so much liquidity that it takes like a black swan event to see these 80% drops. And so, I mean, like, for example, if Bitcoin gets up there and it's a $20 trillion asset, you're not going to see it drop down to 2 trillion. I mean, like, gold doesn't drop down like that because it's such a mature asset. There's so much. And from a practical standpoint, what happens is people that want to buy in, they see it drop 40%. They see that as an opportunity to start buying the asset again. So it feels like to me that we're just going to see this slow grind higher. And I personally, I kind of look forward to that. I really am tired of these 4-year cycles where you just have these massive depressing bear markets where it's just down 80, 70%. And, you got to wait 4 years for it to recover. So I think that it is a good thing if I'm right. And like I said, the tell will be how high and hard this thing runs. But I think there's a really strong case that we're just going to grind higher. Because I mean, like these institutions, they're going in for steady buys. They're just going to be buying, and when portfolio managers, so like for example, like let's say you have a company like a fill in the blank big company that has a bunch of employees and they want to add Bitcoin to their employees' retirement fund, because typically like a lot of employees, they don't know what is in their 401k. They have typically the company hires out some financial advisor company and they manage the portfolio and they put a little bit in ETFs, they put a little bit in this, they put maybe a little gold, maybe a little utilities, maybe they do a 2% allocation to Bitcoin. And so now you have all these millions of people that are just buying, right? Every paycheck comes in, a little bit goes off and buys into this asset. And so now it's almost like you have a floor base of buyers. And we see this a lot with index funds. That's why if you look at indexes, so we come over here, let's just look at the SPX. Whoops, why did I do that? Okay, so I mean, you look at the S&P 500, it just grinds higher over time. Yes, we have these drops. So I mean, let's take a look here. I believe this was, so I mean, it's a 30% drop in the market, and then the people start buying it up again. It just starts rising. You come back here, look at even the COVID scare. I mean, it dropped 35% and it didn't stay there long. I mean, it bounced right back because it's just such a mature index, a mature asset. I mean, it's talking about tens of trillions of dollars. So I think that we're going to move away from the 4-year cycle and we're going to start seeing it trade more like an index fund where it just slowly grinds higher over time. And I think that it'll have higher returns than like the S&P, for example. It'll probably be like 30, 50% average return every year, and maybe even higher. It might be 100% in a year. But the point I'm trying to get across is that my theory is that we're moving away from the whole 4-year cycle thing because the minor sell pressure, it just isn't there anymore. And so we're moving away from that. We're in a market where you have governments and institutions buying pension funds, sovereign wealth funds, all slowly dollar cost averaging in. And because they can't just go in and just market buy. I mean, that would make the price just go stupid. I mean, it would just go straight up. And big institutions, they don't buy like that. They don't buy like retail does with FOMOing in. So they're going to slowly dollar cost average in, and the price is just going to continue to grind higher. And if there are big drops, what's going to end up happening is they're just going to start, they're going to see that as an opportunity and they're just going to start buying. So I think that like my intuition tells me that the asset is matured to a point where I don't want to say that we don't have a big, massive bear market again, but it doesn't feel like, it feels like it's at a point where it's just mature enough that it's going to be a lot less severe whenever a bear market does come, because assets always have bear markets. Like you can't get away from them. I mean, even like the S&P 500, but it certainly doesn't fall 90%, So I think that we're moving into a period where it's just going to be more gradual, sustained wealth accumulation as opposed to this craziness that we've seen the last 3-4 cycles that we've been going through. So those are kind of my thoughts. It's my theory as to what's happening with the 4-year cycle, and some people are calling it a super cycle. I don't know that I would call it that. I mean, I would say maybe a super cycle if it's going to be like it does get really crazy and we see it like run up to $1 million within a year. But I think that the real like super cycle is going to be more a slow for Bitcoin, grind higher over the next however many years as this asset just continues to be adopted by institutions and sovereign wealth and governments all around the world. So anyway, until next time, y'all take care.